Season 54, Debit Suisse lost its biggest, most loyal investor. Swiss National Bank posts an annual loss of 132.5 billion. How is any of this sustainable? Shouldn't we be imploding by now? Dude, we should have imploded 2 years ago. What they should have done is they should have just let GameStop run to $1,000, right? It would have knocked down every single hedge fund, wiped out a couple of banks, would have been done. They would have been able to point the finger at, oh, look at all this naked short selling and these retail investors. It's their fault. And then they could have rebuilt from there. But instead, they postponed the inevitable and have thus made everything so much worse. I mean, since that period of time, the Federal Reserve has bought close to $9 trillion in securities, right, to try and boost the market. They could have saved that $9 trillion and just let the market just shit the bed. Blamed retail and hedge funds and then started over. But no, they had to try and protect everything. And by trying to protect everything, they've made it so much worse. Switzerland does not have the economy or the population to support losses like that. They don't. And a lot of the people who have their money in those banks are some of the scariest, worst people in the entire world. So I want to know what Switzerland can do to bail themselves out. There's only, 5 million Swiss residents? So how many people? Let me look this up. How many people live in Switzerland? Oh, 8 million, 8.7 million. Okay. So if we could bring out the calculator. Boink. Gotta get the calculator. Calculator. Bam. There it is. Okay, so we got to turn off the paint, don't we? Boom. Okay, so we got the calculator. So 132 billion was the loss. Divide that sucker by the 8.7 million Swiss residents. Oops. So that's $15,000 per Swiss person this year that the central bank alone lost. So what's the average income in Switzerland? Like $60,000, $70,000. About a fifth of every Swiss person's income is devoted to the losses of the Swiss central bank. Per capita GDP Switzerland. Oh, 91,000. Okay, so this is a little bit better. It's higher than the rest of the world. So that's per capita GDP. That's not necessarily salary. Let's do per capita salary. Per capita salary is 54,000? 59,000. So about one quarter. So $60,000. About one quarter of every Swiss person's salary is devoted to the losses of their Swiss National Bank. That's not particularly sustainable, especially on like a per year basis. Like the United States has a huge population, got 330 million people or whatever. And our central banks can't lose money because we can just print. Because everyone wants US dollars. So we can just make all those US dollars and things go great. Interesting though. That's bad. And what did Credit Suisse do today? I was looking at the pre-market. I didn't actually look at their CS. Credit Suisse. Okay, that did not bring up anything. Credit Suisse. There we go. $3. It dropped down to $2.97. That's weird. So doink. Like they had when the sales were happening, which was Friday. So this is when Blackstone dumped, right? Over $3 down to $2.73. Took the whole rest of the day and then bounced right back up again. And so that's Thursday. Thursday they dumped everything. And then they announced today, like, hey, we got rid of it all. And the stock is like, cool. Your largest investor just dumped everything. flash crash the stock price in one day, and you bounce right back as if everything's normal again. That's weird. That's not how it should work. Plus, like, if you're dealing with an international bank like Credit Suisse that should be one of the largest players in the entire world, the fact the stock likes to dip below $3 is absolutely mind-boggling. I mean, let's just look at where it should be. Like, Credit Suisse, $72. That is, first-rate blue chip stock price right there. And, the market collapses, as it does. And when the market collapses, it goes down to $25 because the entire economy of the world has shit the bed. It rebounds back up to $50, and it's just been a steady decline ever since. And Evergrande was what? What about here? Well, it's 2020. Evergrande was 2021. Yeah, $10 when they took on those giant losses. And ever since then, it's just been down, 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 down. I mean, when the hiccup does come, I don't think Credit Suisse will exist. I don't think they'll be around anymore. SJ, happy belated birthday, Houston. Are you late or are you early? I don't know. Whisper, happy birthday, Houston. In your opinion, if crypto didn't exist, do you think MOATs would have happened by now, or do you think they'd find another tulip to keep their assets under management propped up? That's a good question, because you have to think about how many crypto bros are out there. And there's a few of you crypto bros that are in the chat right now. Like, there's hundreds of billions of dollars that have been spent on cryptocurrencies that could have been spent on anything else, right? So my guess is that the market would probably be even more inflated than it is now if it wasn't for crypto kind of spreading out the interest. It's like how TV ratings aren't where they used to be because, back in the 50s, you had 3 networks, and every single time, I Love Lucy came on, it was like a record holder for the most people watching a TV show. But as we made more network television stations, as we introduced cable TV, the viewer share got smaller and smaller, so only large events like the Super Bowl would get huge viewership numbers. And then we had computers and the internet and video games and, all sorts of things like Twitter and Facebook, whatever, taking people's attention away from television. And so now the share of folks who can watch TV is smaller than ever with the most television networks there have ever been. So the stock market's kind of the same way. Like, imagine if the hundreds of billions of dollars spent on Bitcoin and Doge and Ethereum and everything else didn't exist. And instead, all that money was being spent by a bunch of bros in the market. What that would mean for the price of all this stuff. I think it would be a whole different league right now. We would have 2-3 times as much money into these meme stocks at the moment. And that might be enough to push it all over the edge. Right? Jersey, is it me or do they want to ban retail participation in gray market and thus OTC? That's what it sounds like. But if they ban retail participation in the OTC, then how are they going to short the OTC? They need us, right? If their entire business model is built upon shorting to us, and then no one can buy those stocks except, the pros, and the pros aren't going to get shorted too because they don't play that way. Who are they going to sell to? How are they going to do anything? I don't understand what their goal is here. Just ban naked short selling and everything's fine. That's all I have to do. No naked short selling, all the problems go away. Citizen 54 thoughts about Citadel, New York Stock Exchange, and Vanguard complaining about new SEC rules. Reads like a thinly veiled hostage letter. Regulate us and everything implodes. Thoughts? Let everything implode. Implode everything. Just light the fuse, man. Bring it down. Thunk. I mean, their threats are basically what needs to happen to the market anyway. So it's kind of empty threats. Like, the market's going to implode in a terrible, terrible, terrible way. Now we can blame you, right? So I don't really see like where their threats can get to at all. Like, monkey butt. If say, monkey butt, you were chasing a deer, which you love to do. You love to chase a deer on the woods. You're chasing a deer, and the deer is like, man, if you keep chasing me, I'm gonna have to change the rules. And then you're monkey butt. You're like, well, if you make rule changes, it means I'm going to chase you. Doesn't really have an effect upon the situation that's happening at all. Monkey butt still chasing the deer. Deer still being chased. At some point, someone's going to tire or get killed. That's just the inevitability, man. Jethro Houston, what are your thoughts on the blip theory to describe inflation flare-up? Or do you think it's likely to continue? Blip theory. I have not read anything about a blip theory. Site blip theory inflation. Fed wrestles whether recent data blip or warning 4 days ago. Well, no one sent me this article. Blink. Okay. Washington U.S. Federal Reserve wrestled Thursday with whether recent data showing inflation, job spending all hotter than expected was a blip or a sign that even higher interest rates could be required to slow price rises. Well, I mean, we already know higher interest rates are required to. So it's amazing how you can close this thing and then it just reappears again. Separate comments from the Fed Governor Chris Waller and Atlanta Fed President Raphael Bostic. Posed a question central to the next phase of the Fed's battle to lower inflation. Is monetary policy again slipping behind the curve of surprisingly strong economy that needs even tighter conditions? Adobe, go away. Or is slower growth and lower inflation already in train? We know we talked about this last week that they need to raise interest rates to about 10% to combat inflation, and they've not gotten there. And they're raising too slowly, so that inflation is still outpacing whatever interest rates that they're doing. They need to make the interest rates absolutely punishable. And Adobe, quit going there. And they're not raising them fast enough. What they do instead is that they threaten, it might be a 75 basis point or a 100 basis point raise, and they do it 25, so the market goes, woohoo, yay! And inflation continues. Because it's not as bad as we thought. It reminds me of Beer Fest, when the American team is like sloppy and they can't do anything right, and it comes down to like the final chug-a-lug for Beer Fest, and the Americans were like rope-a-dope the entire time, and they're like, we are not that drunk, and they're like, oh, they're not that drunk. That's kind of what happens every month when the Fed only raises 25 basis points. Is they're like, they're not that drunk, and everyone celebrates. What the Fed needs to do is they need to say, you know what, there'll probably be a 25 basis point rise in interest rates next month, and then do a 75 or a 100. Do the opposite. Punish them. Get the SPY to go wonk, and make interest rates actually painful. I mean, it's the only way to actually combat inflation. It sucks. It's sort of like that austerity crap that people will be out of work and whatever. But do you have to prepare for actually fixing the problem? Which is probably the only good thing Reagan's Federal Reserve did in the 80s was make punishing interest rates to stop inflation. it sucked. It hurt. And everything else the Reagan administration did, we've been dealing with ever since. But most of those are, cultural aspects of our society that have been absolutely damaged. But the Federal Reserve got that part right. You had to actually whip inflation. You had to make interest rates punishable. And we just haven't gotten there yet.